Hey folks, Dan Frio here, the rate update. Today is it's February 5th. Where I've been? February 5th, 2021. What's going on in the stock market, the crypto market, the real estate market, and the bond market? Well, got some good news for you guys all around, and some of the positions that I added to in my portfolio in the last week or two are paying off. Don't go away. We'll be right back. Hey guys, the big number that came out today was the employment or unemployment number. I'll say the unemployment number. So I'm going to go over that with you here in a second. That plays a big role in what's going on with all this stuff. Stocks, bonds, mortgage rates, real estate, and everything else. So the biggest pieces of the puzzle right now that's being monitored is the employment rate or the unemployment rate. We'll go over that here in a second. The pandemic, which we got some good news out on that as well. Government stimulus, good news out on that as well. And earnings, good news out on that as well. So let's start on this. Let's go down this path. So the unemployment rate, let me give you some numbers, or let me show you some of the things that I'm seeing. Payroll barely grew to 2021, even as the unemployment rate they're saying fell to 6.3%. Guys, that's a fallacy. And here's the biggest piece of this puzzle. You have to dig into these numbers. That's what I do for you guys. That's what I do for myself. So I'll put it that way. I monitor all this on a daily basis because, one, it's my job to know what's going on with mortgage rates, what's going on with real estate. Me personally, I invest my money personally. So I'm trying to teach you guys what I'm doing. So this channel is basically, I'm not a stockbroker, I'm not a wealth planner, I'm not a professional investor. I'm just teaching you guys, doing this for teaching and entertainment purposes to show you guys what I'm doing. And maybe you can learn from that and start doing some of your own research and seeing what might work for you. So the unemployment number, what's happening right now is we had, and I dug deep into this. You have a lot of people not even looking for jobs right now. Okay, so the part of the new stimulus package that's going to pass, and it's probably going to pass in the next 24 to 48 hours, I'm going to tell you why in a second, is, and this is my take on it, so I'm not trying to step on toes and hurt anybody's feelings, but you're coming out saying, okay, we're going to pay unemployment, we're going to and extend the unemployment benefits until September. Guys, so basically what you're telling everybody is you really don't need to find a job. And again, I'm trying to go light on this because I know there's people in desperate need. I get it. But when I'm driving to work, I go through a ton of manufacturing areas and a ton of businesses. I have a lot of friends that are in manufacturing and such, and they're like, we can't find people to work. And I'm driving down these areas and there's help wanted signs everywhere. So I think there's a lot of jobs out there. But when you're saying, we'll pay you X amount a week and you just stay home and it's probably might be more than you're making in the first place, why would you go back to work? Okay, so again, I understand there's a lot of people hurting, but there's a lot of jobs out there too. So I'm going to keep it at that. But there's a lot of people that are no longer even looking in the workforce. So if you add those numbers back in, the true unemployment number ranges from about 9.3% to about 9.9%, the true unemployment factor. But when they come out with this, if they came out and said, unemployment's at 10%, everything would start to really take a turn down. So they kind of buffer these numbers and cherry pick some numbers. So that's my take on that. You're more than welcome to do as much research on this as you want, but look into that piece of the puzzle. The pandemic last night, the government put into a budget resolution. So what they're doing right now is they're fast tracking this stimulus package, and they don't need Republican approval on this. So it will not be bipartisan because Republicans want to tighten down a little bit, and the Democrats don't. So the Democrats are in control of everything. That's how the voting system works, and they're going to fast track this stimulus package through. So you're going to see that, some news on that today and throughout the weekend, that's going to go through. There might be some minor adjustments to it, but it's pretty much a done deal, guys. So you're going to see the stock market kind of go up. Unfortunately, you're going to see bonds start to go up. but we're going to see the dollar start to come down, and I'm going to show you all of that in a second. What else? Earnings season is still here, and it's doing really good. You're going to hear a lot of feedback moving now from GameStop, that debacle that happened, to now automakers not being able to hit their numbers because of a semiconductor shortage. Let's dive down that and maybe take advantage of that. So let me show you what I'm doing. So we go here, and here's the headlines. Payroll numbers hit 6.3. Okay, we know that. But because of that stimulus package, look at what's going on in the markets. You have green across the board. So all the markets are up. The Dow, S&P 500, the NASDAQ. Okay? The employment numbers, here's where the numbers came in. And this is where you got to really dig in. Non-farm roll payroll, they came in up 49,000. It was expected 105,000. Okay, that's not good. So that's where I'm just going to leave this data here. Go to Yahoo Finance and plug in your data here just to see what's going on. The good news is hourly earnings dropped by 0.2, and what I mean by that is, that'll help halter inflation to a point. So there's where the numbers are there. So we added 49,000, and the expectation was 105. So not a good number. All right. So now let's dig into, because of this, what's going on with the dollar. And again, guys, it's doing exactly what I thought it would do, and where we should start to come back. So the dollar should be trading under this black trigger line. We're above it. So I see further deterioration with the dollar. Why do I follow the dollar? Well, because of cryptocurrencies, and I'm going to go to that in a second. But let's go over the portfolio that I monitor, just so I can show you guys what I'm doing. And what I also recommended in the last couple weeks are three different areas. Cryptocurrencies. So let's look at those right now. I add to my portfolio with Grayscale Bitcoin and Grayscale Ethereum. Today alone, they are up 1.58% and 6.26%. This is today, guys, so far. Today. Okay? So that's where we are with my Bitcoin trades, or my cryptocurrency trades. I've been saying buy Ford for multiple reasons, or I'm adding to my Ford position because of their electric cars, and I think they got a great product and they got a great management team. That is up 1.4% today. Okay. The other areas that I said, or I added to my position, was in the realm of cannabis. Cannabis, as we know, the other day, this stock went from 140 to 210 in a day because of takeover rumors. That is my play on cannabis. That is up another 0.25% today. This takeover is paying people $200 in cash, plus $20 in company stock that's taking over this company. So all the positions I've added to in the last week or two are doing fantastic. Again, my gains are 1.4, 1.58, 6%, and another 0.25% just today alone. Those are those positions that I'm following there. Now let's go to cryptocurrencies. With the cryptocurrency, guys, this thing is killing it. I'm not buying it. These are the cryptocurrencies. Wall Street Bets is up another 134% in the last 24 hours, 1,100% in 7 days. When this turns, it's going to crash, and you would almost bet on that. There's manipulations behind the scenes that's really pushing this up, very much like the GameStop. So if you get into that, monitor on a minute basis, and get out if you see any reversal, because as quick as it went up, it's going to come down. My positions, as you guys know, if you follow me, I have positions in Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. Oh, it does show up on the board. It's down here. I'll try to bring that up here, but let's just go through here. Bitcoin is up 4% or 3.97 in the last 24 hours, 1.75% in 7 days. Ethereum is the area where I concentrate on. It's up another 10% today in 24 hours and 24% this week. That's my position, and I'll be posting on that later today or over the weekend on what actually is Ethereum and why it is a world changer. Litecoin, I have positions in Litecoin. It is up 7% in the last 24 hours and 10% in the last week. And Bitcoin Cash up 4% or 4.5% in the last 24 hours, 3.3 in the last 7 days. I don't hold much of this or Litecoin. I pretty much have a bulk of my cryptocurrencies right here and in these areas right here, the Grayscale and the Ethereum through Grayscale as well. Cryptocurrencies went through there. Now let's move on to real estate. We already went through in the scrub stocks, crypto, real estate. We're watching the mortgage-backed securities market. One of the biggest pieces of the real estate business is what's going on with mortgage rates. Well, as you guys know, as this number goes down, what do you guys know? This number goes down, what happens to rates? Exactly, they go up. Okay, this is going to settle. I can promise you on that one pretty much. But the 10-year Treasury, because of the stimulus package going out there, the 10-year Treasury is starting to move because we're printing money like it's, what did I say yesterday? Like it's dirty underwear or whatever my analogy was. But, I mean, we're $1.9 trillion. We've spent over $4 trillion in this pandemic. It's fixing the economy short term, and maybe that is the best bet. Long term, we are going to have issues, and one big issue is inflation. That's why, how do you protect yourself against inflation? Cryptocurrencies. So what happened here is, and I'll go through this briefly because I know you're here for the market update, not just a mortgage update, is these lines right here, when we're charting anything, these are called Fibonacci levels. If you're watching cryptocurrencies or any stocks, they're going to also say some terminology that I'll explain to you here. These are resistance lines, but however, technically they're called Fibonacci levels, okay? So we kept hitting this Fibonacci level here, and I kept saying, we're going to have a slight reversal or correction. We should be trading down in this range. Well, it was right during the inauguration, and with all that debacle, this thing crashed. And I said, hold on, guys. This is overreacting. We should be trading right in this range right here. This is the 25-day and 50-day moving average where it crosses. We got there. Look, we got there, like I said. However, I went away on vacation and everything went crazy. Well, no, that's not the case. But since then, we've kind of teetered back down through. But again, we see this line right here. This is a Fibonacci level. We're going to have resistance right here, and that's exactly what's happening. We're having resistance right here, which is good. Think of that as a safety stop. So we've driven down to here, and we should bounce off of that. So we should be trading in a range of between 103 and 103.5. That's where we should be trading. If we drop below this, which we shouldn't, because the federal government, the Fed actually came in and said they're going to start buying more mortgage-backed securities and treasuries. This should start kind of calming down this market. So we should be trading in this range within the next week, and that's where we should stay for a while. So guys, that is my report for today. I hope you like it. TGIF, go out there and have some fun. We got about a foot of snow here in Chicago. Thanks to my lovely wife. She got up this morning. I started the snowblower, and she blew the snow off the driveway. So love you to death. Other than that, thanks guys for watching. I would greatly appreciate a thumbs up. Subscribe down below. Hit the bell so you get a notification. Let me know what you guys want me to talk about. If you want me to dig deeper into cryptocurrencies and ETFs and 401ks and anything of that sort, let me know. Because if you recommend it, I'll do it. Take care, guys. Have a great weekend. See you soon. Bye-bye.